Fraud is the auditor's favorite F word, or so I've heard. Internal auditors are required to consider the risk of fraud throughout the course of their engagements. So let's examine the F word a little bit more. Fraud is defined in the IIA glossary as any illegal act characterized by deceit, concealment, or violation of trust. These acts are not dependent upon the threat of violence or physical force. Frauds are perpetrated by parties and organizations to obtain money, property, or services, to avoid payment or loss of services, or to secure personal or business advantage. Stated differently, fraud is any act characterized by intentional deception or misrepresentation. Fraud risk is the possibility that fraud will occur and the potential effects to the organization. Remember, the difference between fraud and theft is the concealment. The fraud triangle indicates three characteristics of fraud. They are 1. Pressure or incentives, 2. Opportunity, and 3. Rationalization. Pressure or incentive is the need a person tries to satisfy by committing the fraud. Situational pressure can be personal. For example, financial difficulties in an employee's personal life, or organizational, the desire to release positive news to the financial media. Such a need may be perceived as a need by the individual, as a perception that they need a better lifestyle, as opposed to an actual need, such as major debts that need to be paid. Opportunity is the ability to commit the fraud. Opportunity to commit is especially a factor in low-level employee fraud. Lack of controls over cash, merchandise, and other organizational property, as well as insufficient segregation of duties, are enabling factors. This characteristic is one that the organization can most influence, for example, by means of controls. Rationalization is the ability to justify the fraud. It occurs when a person attributes his or her actions to rational and creditable motives without analysis of the true and especially unconscious motives. This is the fraudster knowing what they are doing is wrong, but trying to make up a story that makes them feel what they are doing is acceptable. Feeling underpaid is a common rationalization for low-level fraud. Fraud is destructive in a number of significant ways. Monetary losses from fraud are significant, but the full cost of fraud includes losses in time, productivity, reputation, and customer relationships. Therefore, an organization should have a fraud program that includes awareness, prevention, and detection programs. It also should have a fraud risk assessment process to identify fraud risks.